Thanks, Jenny. As behalf of SCORE Fort Worth, I'd like to welcome everyone that's on this call today. We've put something together here very quickly with the intent of getting it out to the small business community, knowing that we don't have all the answers yet. But what we're trying to do is address the changes that have been made here in the last week and a half and talk through some of the more details of it and hopefully be able to answer some of your questions at the end. As Jenny mentioned, for good or bad, we have a lot of people on this call, this workshop, in that we'll have to keep you muted. You please use the Q&A, please use the chat for questions. We'll try to get to as many as we can at the end of this presentation today. As also been mentioned, we will be recording this. We will have the information we are presenting here will be sent out also with the recording. And then, as I'll mention this later on, but we also have a frequently asked question document, try to address some scenarios that you may be facing as part of this, this new legislation act that we'll be sending out to you. As always, we're here to continue to help you as we go through this process. So this is just the beginning of it. So let me just kind of kick off by introducing who we have today. So I'm Bob Sifferman. I'm a certified SCORE mentor, and I'm the chapter chair for the Fort Worth chapter. Helping me out and doing a lot of the work here today is going to be Mark Lenz, also part of the Fort Worth chapter. That's a certified SCORE mentor. The one thing I would ask you to do for those people that are on right now, if you could just take a second, pull out your phone. If you could take a scan of the QR code for us, that goes to our SCORE Fort Worth Facebook page. Take that picture. It goes directly to that. If you could follow us, the reason why you should follow us is that we're going to keep updating changes because they're going to be happening almost on a daily basis as the implementation of this program, this new stimulus plan or act comes into play. So that's one way for you to keep in touch with what's happening. Also through our website, we'll give you some contact information about that at the end. So with that, let's really start to talk about kind of why we're doing this and what has been our focus. So it's just been as of sometime this morning that the Treasury Department started to come out with some details of this program. We as a chapter decided, look, there's so much happening. The need is so drastic here. We've got to get the information out to as many people as quickly as possible, understanding we don't have all the answers yet. So the disclaimer is basically saying, look, we're going to supply as much as we can. There's definitely going to be new laws of definitions by the Treasury and SBA on certain provisions. Some of the processes are not actually live yet to file for PPE or EIDL, but we want you to be aware of them because they'll come on board here very quickly. So that's the first thing. We want you to continue, though, to not take what we're presenting here today or our updates, but also to make sure you're communicating with your team within your company, being your lawyer, your CPA, your financial advisor, on what is best for you based on the changes that are happening here. So we basically suggest, hey, this is one part of a learning process for you on what's happening here. It's going to be dynamic. It's going to change. We won't have all the answers today, but we'll keep you updated on those changes as they go forward. So what are those changes? So as of about a week and a half ago, signed into law a little bit, I think right before New Year's, signed into law as a new stimulus package. It's called, if you look at the Congress terminology, is called the Consolidated Appropriation Act of 2021. This is really, look at it as this is an enhancement or revision to the CARES Act that came out in April of last year. So there's some issues that we're trying to address. There's some additional functionality they're going to offer to the small business community. And specifically, the changes are the following. Okay, there's going to be updates. There are updates to the Paycheck Protection Program, and we'll cover those. Eligibility for initial PPP loans has now been modified. Actually, the modifications is to the benefit of the small business community. What is really kind of cool is the third thing is created a second draw PPP, and those are for businesses, small businesses that actually applied for an initial PPP loan and used it all, but still are facing obviously some drastic economic conditions because of the COVID-19. So there's a second capabilities for these companies to get more PPP monies. The loan forgiveness process, thank goodness standpoint, is being streamlined as best as it can. It's especially for those people to have loan amounts of 150,000 and less, and we'll cover that. Tax treatment on PPP loans, which is very confusing and changed a couple different times at the end of or throughout 2020, have now been clarified, and again, to the benefit of small businesses. The Economic Injury Disaster Loan Program, the grant part, has been opened up again and continues, which is great news. The Employee Retention Tax Credit, which Mark Lenz will talk about here in a little bit, has been extended, but also much more flexible in regards to the flexibility of using that in conjunction with PPP loans. A venue grant program, which I'm not sure how many we have that would apply for, or that would be applicable for them, but there's now a venue grant program available for theaters, music, museums, etc., for relief. And then finally, the continuation of the SBA loan debt forgiveness that was part of CARES. That is now being part of this program and will continue into 2021, and we'll talk about that in more detail. So these are the things we're going to be covering this afternoon. With that, I'm going to turn it over to Mark Lenz to start talking about the changes within the Paycheck Protection Program.
Thank you, Bob. I like Bob, are happy to have all of you joining us today, and hopefully we can help you work your way through the new law. You know, the first item here that we talk about are the changes to the Paycheck Protection Program. And the number one item has been a major concern for small businesses since the IRS and Treasury Department late in 2020 originally put out guidance that the expenses that you receive forgiveness for on a PPP loan would not be deductible on tax returns, which could have substantial financial ramifications to all of you. Everybody's voices were heard by Congress, and in the new bill, they addressed this and provided that all business expenses that qualify for forgiveness will be deductible on your income tax return. And the old rulings are now null and void. The IRS actually issued final formal guidance today in Revenue Ruling 2021-2 for that effect. So that's going to save companies a lot of money from where they thought they were going to be just a few weeks ago. Okay, Bob, you want to go ahead to the next page? All right, another big change for the Paycheck Protection Program is, in addition to the expenses that qualified for forgiveness last time, which those of you who had PPP will recall that those were payroll and benefit related expenses, mortgage interest, lease payments, and utility payments only. That has been expanded to include several other things you'll see listed on this page that fall under 4 categories called operations expenses, supplier costs, worker protection expenses, and covered property damage costs. This, again, is early summary information from the bill and does not include any detailed guidance that will be provided by Treasury or the SBA. But these will be helpful to many businesses because it gives you an additional amount of your expenses that you're expending anyway that will be qualifying for forgiveness under the new rules. One of the things to keep in mind, though, is the rule still says that only 40% of the expenses can be for non-payroll costs that are forgiven. And I'll spend a little more time in detail later on talking about that. Okay, Bob, next page. The last set of changes are a few bullets here. First of them is that if you recall in the first package, if you received an EIDL grant, which were up to $10,000 per company, your PPP loan forgiveness was reduced by the amount of your EIDL grant. That is no longer the case, so you will be able to get full benefit of both the grant and the forgiveness. The loan forgiveness period, which under the old CARES Act was either 8 or 24 months will now be able to be selected by you based on what is most beneficial to you in a period between 8 and 24 months. And lastly, something that will be helpful for the smaller businesses in our group is that loans for less than $150,000 will have a simplified certification application process that is yet to be delivered, but will not require you to have to go through the calculation process that was required initially under the CARES Act. So it will make forgiveness much easier, although you will have to certify to certain things to make sure that your loan forgiveness was valid. Okay, Bob, I think. Nope, I have one more. Nope, I'm done. Back to you.
Thanks, Mark. Appreciate it. So before we go on, I just want to make very clear here is that what we're talking about is changes to a program already in place since April of last year. So all the rules that were in place, all the processes are still there for the program. What we're talking about here are just the changes that are applicable. All right. Now, however, when I say that, keep in mind that if you have a loan, a PPP loan outstanding that has not been forgiven yet, these rule changes are now applicable to that loan. All right. Now, if it's already been 100% forgiven, obviously you're whole anyhow, so it doesn't really matter. But if for any reason you have loans that maybe weren't forgiven because of some exceptions that are now been addressed here, and or you just haven't filed for it yet, these changes are applicable for you immediately. All right. So I'd like you to keep that in mind that, hey, just because you did last year, now these changes aren't applicable. That's not true. These changes are applicable based on last year. The other thing is, if you remember, because it can be a little confusing, when we start to talk about Paycheck Protection Program, this is a program that is sponsored by the SBA, but the actual funding and who you work with is your local bank. All right. So you need to be reaching out to, if you presently have a relationship with a bank, that PPP loan, you need to be reaching out to them because, again, they probably don't have all the information yet. I'm sure they're fastly trying to get it together, but you need to be reaching out to them on processes they might need, because your bank may require some additional information that we're not saying is part of this program. Secondly, is that the banks, all the banks may not, or financial institutions, when I say banks, it could be credit unions, it could be micro lenders, whatever, all of them may not be participating in this next round. So just be aware of that and find out if your bank is participating. They would know by now, I think, if they're participating. So again, if you're talking about PPP, when you get looking for those monies, those are through banks or financial institutions supported by, guaranteed by the SBA. All right. So let's talk about the PPP program that has now been extended. All right. And that's basically what we're highlighting here, is it's been extended to March 31st or until new funding is exhausted. So obviously I would say time is of an essence, since we're January 7th, I believe, if I can remember the date correctly. And it ends end of March or when funding is gone. Now, per the documentation we've seen, there's been $285 billion allocated for this funding. Again, $285 billion. That may be divided up in other areas we're not aware of. So there's significant dollars there, but as we know, that can go very quickly. The application process, the application forms, as of right now, that we're aware of, have not changed. However, the first bullet I have up there is that you need to reach through or go through the SBA, and the link that I've shown here for new applicants, because the loan process has not changed much, but any changes, any documentation, any detailed changes will be documented on this website that we have highlighted through the SBA. Now, again, in fairness to the SBA, they're all trying to digest this information. So it might be a few days before we'll have all that information out there, but I would ask you to continue checking for that information. But again, with the SBA, all you're doing is getting the documentation of the flow. Your actual loan applications will be through the bank. As I mentioned, it's open through the end of March for funding. It is, the exception here is that it's now available 501c6, which are Chamber of Commerce's, trade associations, and associations that are business oriented that are nonprofit. Also, local news organizations are available, are eligible, or housing co-ops may be eligible for the PPP loan. You also, as I talked about, you may even qualify if you took advantage, you may qualify for a PPP even if you took advantage of the economic retention tax credit, which is significant. And Mark will talk about this in a little bit more detail in a couple of minutes. And then what they've cleaned up a little bit here is all publicly traded companies can no longer apply for PPP. Just private businesses and private small businesses is really where the focus is and where it should have been. So to continue on, the changes in the PPP program is that the loan amounts are now changed to 2 million as the max. It was 10 million, they've now gone to 2 million. Before, group insurance payments could not be included as employee cost, which could affect your ability to repay, et cetera. That is now part of your employee costs as group insurance, such as benefits to health, benefits, pension, et cetera. And then it was kind of screwy the way they set up on how you calculate your earnings for seasonal employees. To be fair, they finally have been fair enough to open it up that basically says you pick any 12-week period between February 15, 2019 and February 15, 2020, whatever your season is in that 12-week, and that's what you determine your payroll costs are and what your maximum loan amount should be. So they've added flexibility, I should say, for seasonal employees and employees, employers. As Mark mentioned already too, is that again, the covered period is up to 24 months. So you determine which one you want. Is it from 8 to 24 months is your call?
24 weeks, right?
Excuse me?
24 weeks.
I'm sorry, 24 weeks, you're correct, Mark. 8 to 24 weeks in regards to loan forgiveness. So what we're saying here is, in the past, you had to determine whether you got all your employees back in and you're paying them closely the same amount within 8 weeks. Now they're saying, yeah, I can do that between 8 to 24 weeks. Now, we understand there's going to be exceptions to that, where you're trying to hire employees back in and they won't come back in, whatever. That's what the note is for. The note is there's safe harbors that says, if I've done my best efforts, okay, to hire employees back in, to keep my payroll total cost close to the same, it's got to be, I think, within 25% of what it was, then you can have forgiveness. So for exceptions, again, we've given you a web link at SBA of the details that talks about the safe harbor in regards to exceptions to that. What if I tried, couldn't get there, et cetera. So if that's an issue for you, there's a link for you to get more detail on. Okay, note in the bill that $35 billion is set aside for first-time borrowers. Again, they're trying to address something that happened where higher-end companies, larger organizations, maybe companies that really didn't deserve it, got PPP monies very early on. They're now saying, well, we're going to hold off, and we're going to not hold off. We're going to set aside $35 billion for first-time borrowers. We're going to set aside $15 billion for employers with 10 or fewer employees, and for loans less than 250,000, and for entities located in the lower income neighborhoods. So again, trying to be very focused to get to the small business communities, the underserved business community, and getting this money from a PPP standpoint on this second round. So we have the initial PPP. It's been extended, but what's also been added is a second draw, or an access to a second PPP loans. And people are going, what is the second draw? What the heck does that mean? Well, if you're in a case where you have actually applied for a PPP loan, received the money, and paid for and spent it all right? So, but you're still in, an economic condition that your business is suffering from, you have the capability to do a second draw, to apply for a second draw PPP loan, okay? Really kind of a nice feature, I think, that's been added into it that says, hey, I've applied for PPP in the past, I received it, I paid for it, I'm still suffering. What is my other relief? You can do a second draw on a PPP. The key here is that it's really focused at people doing a second draw of less than 300 employees, and you have experienced a greater than 25% reduction in gross receipts, during any quarter in 2020 relative to 2018. All right, pretty simple, I think, for the most part. Again, entities with significant ties to China are not eligible. You'll see in Safe Harbor, they'll define what those are. For the most part, it has to do with ownership and also equity. So if 20% or more of your company is owned by a Chinese company, could be affect that. So that's the eligibility. The loan amount is really the same as it was in the original PPP. So you can take your average monthly payroll costs, and again, changes have been made where you can have more factors as part of your payroll cost, and you can take that amount times 2.5. Now, the caveat here is that your borrower, because we're going through a bank or a financial institution, your borrower may determine a different loan amount than 2.5 on your average payroll cost. That's up to the borrower. But traditionally, the guidance has been to be 2.5 of your average monthly payroll cost. The exception here, and this is to really address the hard hit areas of accommodation and food services, the restaurants, et cetera, is that they can use 3.5 as a factor to determine their loan amount. So acknowledging that the struggles they are really going through right now, they have the capability to get higher loan amounts. And it's again, 3.5 for that industry. For those people that are familiar with the NACIS, which is a classification of businesses, if your business starts with 72 for that classification, again, 72, you fall within the ability to do 3.5 times. Again, like we talked about, seasonal employees get a lot more flexibility with the 12-week period. And the second draw loans are much like what's been changed. It's only 2 million now, it's only 10 million. So all loans coming through PPP, whether it's initial loan amount or whether it's a second draw program, are a max of $2 million. Okay, with that, I'll turn it back over to you, Mark, on the loan forgiveness.
Okay, PPP loan forgiveness. From an overall standpoint, based on what we've seen so far, the calculation itself is basically the same as what it was under the CARES Act. We may get more guidance that changes that, but for now, that's what we know. The loan forgiveness is like it was before. It's the lesser of two amounts. The first amount being the costs incurred or expenditures made between the date of the origination of the loan and a period of your choosing that is between 8 and 24 weeks after origination. That creates flexibility, but also potentially creates a little complexity because you'll have to figure out what period within that 8 to 24 weeks is most advantageous to you. Could result in some number crunching for your accounting folks. The second piece of this is B, it's the lesser of what I just said, and B, payroll costs for the same period divided by 0.6, which serves as the cap on total loan forgiveness so that payroll has to be 60% of the forgiveness amount. So an example I will use, say your payroll for the whatever forgiveness period you select is $60,000. You would divide that $60,000 by 0.6, and I used that number so I would end up with around $100,000 amount. That $100,000 amount would be your maximum forgiveness, of which $60,000 would be payroll and $40,000 could be all of these other costs that we talked about before, plus the new costs of whether you have supplier costs that you have to pay for that meet the supplier cost requirements. Almost everybody has covered worker protection expenditures because of the COVID, either for your workers or just for your business in the way it deals with customers. So keep that in mind, that that can only be 40% of your expenses. All right, Bob, you want to go to the next page? Like the original PP loans, the amount of forgiveness can be reduced if you have reduced your number of employees from the time you took the loan or reduced employee salaries by more than 25%. In the loan application, there's a formula that you put in your numbers and it calculates what your forgiveness can be. And you can have partial forgiveness. It's not all or none. You can have a portion of your expenses forgiven, even if you have to reduce your number of employees or reduce salaries. Same safe harbors apply that applied to original PPP loans on these next ones. And for example, I'll tell you a few of those. They're much more detailed than I can go through right now, but assume you had to let somebody go because you didn't have business and you couldn't pay them, but you hire them back later in the period. There are certain circumstances where you can not have to reduce your forgiveness, even though you reduced the employees for part of that period. Also, if you reduce salaries, the same kind of a thing. If you get back up to the same level it was by the end of your period, you may not have a reduction in your forgiveness. This is something you're going to have to work with your accountant on and wait as we see more detailed guidance, which will describe whether the rules are exactly the same as last time or whether they're going to change. All right, Bob, next page. The expanded employee retention tax credit. This credit existed in the CARES Act, but that credit under the CARES Act was only 50% of $10,000 in total for the year 2020. The new act is much more generous, where it allows a 70% credit of up to $10,000 in wages for the first 2 quarters of 2021, meaning that your maximum credit was $5,000 an employee under the initial CARES Act, but this time it's a maximum of $14,000 per employee, just again for the first 2 quarters. And the eligibility is expanded to employers who only experienced a decline of 20%, where the requirement was 50% of top line in the previous bill. And an exciting change is you can receive both the ERTC and a PPP loan. They just can't cover the same payroll expenses. So if you have payroll expenses that you did not receive forgiveness for, you can take the ERTC credit against that. That was not available under the terms of the CARES Act. So that will again help out companies going forward. All right, Bob. One last thing. This is a refundable tax credit. So some of you might not, because of your business, have paid any taxes that you could get a tax credit on. You actually can still do the calculation and the IRS will pay you. We'll actually write you a check if you qualify for the amount that credit that you have that it cannot offset taxes because you didn't pay enough or you didn't pay any. So this is something you should certainly talk to your CPA about, but don't forget it just because you're not paying any taxes. All right, Bob, now back to you.
The next thing I think is very exciting. Is the reintroduction of the EIDL grants. Now, again, the EIDL, unlike the PPP, you need to go to a bank for the PPP. And the EIDL, you go to the SBA, and you actually file for that program through the SBA. So keep in mind that with the EIDL, it had 2 components at one time. It had an EIDL loan program, and it had an EIDL grant program for those people that did it. It basically, the EIDL grant program was up to $10,000. At the time, we thought it was completely free of any repaying and or tax ramifications. They came back and changed that, which I'll address here in a second. But basically it was $10,000, up to $10,000 being able to provide to you. That has now been opened up again, just for the grant, not for the loan program. So for those people that are interested in reapplying or applying again for EIDL grants only, if you're a small business with less than 300 employees, located in low-income neighborhoods and have experienced a 30% reduction in gross receipts, you're going to have priority for these grants, okay? And your reduction in gross receipts should be comparing any 8-week time period between March 2nd and December 31st of 2020 compared to the same comparable week time frame in 2019, all right? So again, keep in mind that that's the information that's going to be asked of you. The key word there is priority for the full amount. If you don't happen to fall into those guidelines, my suggestion would be, if you still want an EIDL grant, my suggestion is definitely still apply for it, all right? All this is saying is our priority is going to go to this area first. There's $20 billion allocated to the EIDL grants. So again, not sure how long that will go, how long that will last. It is open to the end of this calendar year, or until it's completely funded. So again, another option for you. Again, if you did a PPP loan, you can still do this. And the other thing I'd like you to think about is that if you applied last year for a grant, the EIDL grant, and let's say you received $2,000, or you can reapply this year for the difference. So you can reapply this year and asking for $8,000, all right? Depending on the background, your circumstances has been highlighted here and the criteria. So you can actually get some more monies, though you may have gotten some monies from the EIDL grant last year. But again, it's always going to be up to the max of $10,000. Now, as of this morning, and again, this is very dynamic, as of this morning, this is not live yet. The SBA, as I've mentioned, is obviously feverishly working and getting all these changes in place. So I just ask you to check the site we have here on our presentation, the SBA website, which talks a little bit more about this details. And actually on that site is where you would apply for the EIDL loans. We will also be updating obviously into our website and social media changes as we get those. But really keep that in mind. It's a nice benefit if it makes sense for you. The other area that's been addressed that wasn't addressed initially, and I'm not sure how many people it's applicable for on this call, is the venue operator grants. It's being called. It's a grant. I have to say right now, I'm not quite sure if that's going to be through the SBA or not. We'll get you more clarification on that. My assumption would be, yes, it will be through the SBA, but let's hold off before we really kind of say that 100%. But basically, it's a $15 billion grant program. So $15 billion have been set aside, and it's really focused on live venue operators, theaters, performing arts, museums, motion picture theaters have been hit hard, obviously, in regards to helping them through this, obviously, pandemic. And it's focused on those organizations that have had a 25% drop in revenue or more, and most of them have. The grants are available, and again, a grant is different than a PPP loan. A grant ideally is free money. It's money you don't pay. I shouldn't say it's free money. It's money you don't have to pay back. It's a grant. And the grants are going to be the lesser of 10 million or 45% of your gross earned revenue in 2019. All right. And then if you receive the grant, if you receive this grant, the venue operator grant, not the EIDL grant, but the venue operator grant, you cannot apply for a PPP loan. You can't do both. So here's the exception where the venue operator grant, PPP, you can't do both. Now, the other nice feature, and this is more applicable for people that already maybe had existing SBA loans before the pandemic hit and the CARES Act came into play, or have recently got SBA loans, but SBA is known for, until today, or in the last 9 months, 12 months, is known as offering very cost-effective, guaranteed loans, working through local banks to help start small businesses, right? And that's been their focus. And traditionally, their programs have been, it's highlighted here, are what they call loan programs of 7A, 504, and micro loan programs. Those are different types of programs. You can look at SBA website to get the details on that. Now, what happened in the CARES Act has now been updated for the Consolidated Appropriation Act is that you receive an additional 3 months of forgiveness of your interest and principal starting February 2021. So if you had a loan, I'm not talking about a CARES Act loan, a PPP loan, or EIDL, but you had a loan from the SBA that was 7A 504, a micro loan, before the CARES Act. There was some forgiveness of payment last year, but it was only for a short period of time. They've extended that now, that you can now have forgiveness of payment, and that's not a delay of payment, but forgiveness of payment starting February. So it's February, March, April. Now, if you have a certain type of borrower, meaning I'm a borrower of SBA microloans or 7A Advantage loans, you can actually extend that 5 months more. So that goes to a total of 8, if I do my math correctly, 8 months. Now, you could have those loans, or if you're a borrower of a 7A or 504 loans. So in other words, you apply for 5 months additional if you have a micro loan and advantage or advantage loan. And again, you would know if you're working with the SBA today, you'll know what type of loan you have. If you have a 7A or 504 and you're hit in somewhat hard hit sectors, more so than others, such as educational services, arts, entertainment, recreation, food services, accommodations, you actually also get the additional 5 months. So you can also go out 8 months total. And again, that's paid by the government, principal and interest. Lastly on this, any new loans, any 708, 504 or micro loans that are issued or made or approved by the SBA between December 22nd of 2020 and September 30th of 2021 will receive 6 months of government payment of principal and interest, okay? So that's a 6-month loan period for loans that are happening since December 22nd to September 30th. So that's people are looking to, hey, I'm going to continue growing my business, I need capital, etc. That's you can borrow money and it's free pay. There's no payments for 6 months. Keep in mind on any of this, it's a maximum of payments they'll cover, and that's $9,000 per month for borrowing. All right, Mark.
Okay. Next section talks about pandemic unemployment assistance. And this is also an extension of the expanded unemployment benefit from the CARES Act. And it extends the time frame from December 26th, 2020 through 3/14/21. And you'll note on here that it includes contractors, self-employed, gig workers, other people that don't generally get unemployment benefits through the ordinary course of unemployment benefit programs. Ineligibility or eligibility is for people who are ineligible for or have exhausted their regular unemployment benefits. You go get your regular unemployment, or you tell your employees that you have to leave go, that they need to go file for ordinary regular benefits. But all of those have an end period on them. These things that are part of this pandemic unemployment assistance will kick in at that point and extend the period of time. The thing that people are going to have to do is certify that they are unable to work for a variety of reasons that are you have COVID, somebody in your family has COVID, you're a caregiver. There's a whole laundry list of other things that you have to certify to be able to get this benefit. All right, next page, Bob. Oh, you're already there. If you recall last time, there was a lot of discussion about the extra $600 a week in unemployment benefits. This time, Congress decided to cut that in half so that the updated plan will provide $300 a week in additional benefits. We have no details about how this is going to work and what you have to file. So again, like we've been saying throughout here, the devil's going to be in the details, and between you and your payroll service or your CPA when it comes time to do this, or helping your employees that are having to deal with this. We'll try to keep up with the changes and provide information in Facebook, on our website, and in future webinars. And lastly, the PUA is administered through state unemployment agencies. So wherever your employees are, they should deal with those offices in that state they reside and work in. Okay, Bob, back to you.
Okay, we're in the midst of wrapping up here now. So we put some caveats. We've been talking about it throughout, I guess, but basically we made a decision to get this information that we knew out as quickly as possible. Our focus here is to disseminate this information for your planning purposes only, knowing we don't have all the answers yet. However, when we find the answers, when the new forms of process are put in place by the SBA or your PPP loans going through, or the process of the PPP, we'll keep you updated through our website, through social media. Doesn't mean we're the only people you need to talk to, but we will also be keeping you updated on that. We encourage you, as Mark has indicated I did earlier, to get with your accountant, to get with your lawyer, to really review this information and determine what's best for your organization. Make sure you're checking with your banking institution and start lining up. Are they going to be doing the continuation of the PPP loans, or the second draw of the PP loans, making sure you've got that relationship settled and you know what they're doing. And then finally, really, we ask you to keep in touch with us, obviously through our website at fortworth.score.org, to get updates that we'll have posted on a regular basis. Also, obviously, the SBA.gov website will have further commentary, future frequently asked questions, and other explanatory information that we suggest you continue to look at throughout the process. So from a resource standpoint, we're not just presenting this and leaving you. From a chapter standpoint, this is our contact information, 817-871-6002 if you need more information, or our website at fortworth.score, as I indicated. As I also indicated, if you have your camera, if you want to take a picture of our QR code, you can follow us on Facebook, and we'll be updating what's happening there on Facebook to keep you connected. You also will be able to obviously connect with the Small Business Administration. So the Small Business Administration phone number is 800-659-2955, and it's www.sba.gov. Lastly, I just want to just real quickly say, from a SCORE perspective, for people that may not know us, we're an organization of over 10,000. We're all volunteers. Our focus is to give back to the small community, to help them, to educate them. We really do three things. We basically do one-on-one confidential mentoring. So if you're interested in getting more details, get more mentoring from us, feel free to reach back to us. We also do workshops on an ongoing basis. And then also we provide hundreds of templates and free webinars that are off of our website. So SCORE, as I indicated, have over 10,000 volunteers. We have something less than 300, chapters. SCORE Fort Worth is just one of those chapters. So feel free to reach out to us, or if you have a relationship with your present SCORE chapter, or if you're located in New York, you want to talk to somebody in that, let us know and we'll connect you with that SCORE chapter. So I want to thank you for your time. We're going to now open it up from a QA standpoint. Again, we're not going to get to all of them. I see that there's quite a few here. We're going to try to get the most relevant, hopefully, and what we think the most important. So Jenny, we'll turn it over to you on Q&A.
So there are a lot of questions. One that I keep seeing coming over and over again is, if you apply for the PPP loan the first time, are you still allowed to apply for it the second time?
Yeah, that's a great point. If you apply for it the first time, let's say you were denied, I would apply again. Okay. So just because you were denied does not mean you shouldn't apply for it again. Again, working with your bank, though, to determine why you were refused is really important. So make sure you do, because a lot of what we've seen in the past is people weren't accepted more because the due diligence, well, I shouldn't say due diligence, the details of what was needed wasn't provided, so they were refused. So be careful on that. Just make sure you spend enough time and get into details. But yes, if you applied, and if you did apply and received it, but used it all, but you still have a need now ongoing, that's where the second draw of the PPP comes into play. You can apply that.
Is it necessary for you to use the same bank the first time you applied for the PPP loan, or can you use a different bank?
Our understanding, it's, you can use a different bank. However, I would think that the bank that gave you the original ones are going to give preference to those customers, those clients. So if you go to a bank you did not get the first one from, priority wise on how they fill that, and I'm speaking for the banks or financial institutions. So, but basically, I think they would come and say, hey, I'm going to work with the people I had a loan already with, and I'm going to fulfill their requests first. Would be my feeling. Okay, doesn't mean you can't. There's nothing that says you can't work with any bank or financial institutions. So credit unions. I mean, PayPal is doing this, right? Square is doing it. So there's a variety of other institutions doing it. And if you got ABC Bank and you want to go to PayPal, sure, you can do that. You just got to worry about what your priority is.
Okay, as a sole proprietor, we were told originally that we would get 2.5 months of salary based on 2019 1099s. Then we saw it was limited to 5,000 a month. Is sole proprietor still limited to 5,000 a month salary?
Are we? I don't know if I understand that. Mark, do you understand it?
No, I looked up some information on sole proprietorships and how the 2.5 was calculated. And from what I can tell, it looks like it relates to your IRS form 1040 Schedule C net profit amount, and 2.5 times the average number for the year there for sole proprietors. Again, as we say, talk to your CPA. They're going to be obviously totally in the weeds on this and know every detail by the time that you do this. So that's my understanding based on what we've seen, but be sure to check that out.
Okay, if you've started making payments on the 10,000 EIDL grant, will you get that money back?
The nature of the grant is you don't pay back the grant, you pay back the loan. So that's, again, the key thing here is there's two parts of the EIDL. One is a loan amount. And I think that person's talking about the loan amount. And yes, you have to continue paying that back. If you received a grant or partial grant, it was up to $10,000. So if I received $2,000 grant, I can now apply for another $8,000, and that you don't have to pay back, the grant amount. So keep in mind, there's a grant amount on the EIDL and there's a loan amount. If that individual is talking about the loan amount, yes, you have to continue repaying that back, but not on the grant.
Yeah, Bob, I wonder if they're asking about the forgiveness offset. And since that forgiveness offset goes away, is that retroactive or not? And I'm not sure I know the answer to that question.
It is retroactive.
It is retroactive to last year. Okay, I wasn't 100%.
Everything I've seen so far, and again, it could be changed. Everything we've seen so far is it is retroactive. But the loan payments is the thing that's key, my answer.
Okay. So there's someone that's confused about the payroll start date period covered with the PPP for forgiveness. If I receive my loan on April 21st, 2020, should I start counting my payroll expense starting in February 15th, 2020, or after she received the loan?
The forgiveness calculation, that 8 or 24 weeks last year was from the date the loan was when you got the money from the loan. That's when it started, and you could either pick 8 or 24 weeks for last year. Again, as we said earlier, that period is more flexible, that you can pick any period between 8 and 24 weeks for any new loan that you get for this year. But last year does not change based on my reading from either 8 or 24 weeks from the date of the loan.
Again, I think that's probably where we need clarification a little bit, because again, it's reading through the documentation that we've seen so far is that all these changes are retroactive and apply to the ones that I've done in 2020, unless your loan is already forgiven. And this doesn't really matter.
Okay.
So we'll get more clarification on that.
Okay. Is the EIDL grant limited to 1,000 per employee or the 10,000 per business?
It is good point, because they started to calculate it by employer last year. to me, it's my understanding it's business, but it's based on the criteria, the priority we put in, which I've forgotten offhand, but under 300 employees, low income, reduction of earnings of 25% or whatever, if I remember correctly. So it is not based by employees, our understanding right now, it's based for the company.
Okay, and you had mentioned on certain bad neighborhoods can get priority. What classifies, how do you find out where, like if you're in a bad neighborhood?
Well, let's use the term low income.
Sorry.
Low income. I think there's a, there's a U.S. government, I forgot, I'm trying to come up with a term, Mark, I don't know if you do, but where they have classifications where they classify those as lower income neighborhoods. I just don't have the definition off the top of my head, but the SBA probably could help you out if you went to their website where they can define what lower income neighborhoods consist of.
So someone had typed in the chat that they can look at HubZone.
Thank you. Okay, HubZone, whatever, will determine.
So can my payments on the 10,000 EIDL advance be applied to the EIDL loan?
If, yeah, I guess I'm thinking about it. I see no reason now that you can't do that. The only thing is if they audit you, no, offhand, I would say yes. I can't come up with a reason why you couldn't. But again, I would cover that with your accountant.
Okay, did you guys cover any programs that are available to assist the 501c3 companies?
All this is applicable
Yes.
for 501c3.
Okay.
This is the old PPP covered 501c3s. So again, all we're talking about here today is any changes to this, but so nothing's changed from last year on 5. So yes, to answer your question, 501c3.
Okay, so someone had already filed and they were given the 100% forgiveness, but now they're making them pay back the 4,000 EIDL grant. Would this be forgiven too with this now forgiveness policy? Since this person has already been processed?
If it's retroactive, that would probably be yes. And that is, Bob thinks it's retroactive. They need to check that out.
Now the SBA, according to some documentation, just saw the SBA's got to come out with some clarification on that, on how that happens. And it was kind of promised that they'll come out with that, and put the SBA on the spot, but I'm sure that's a couple of weeks away before that process is identified.
If my business does not serve low income but is in low income, do I qualify?
My understanding, yes. But again, we'll have to, when all the final interim rules come out. And again, there's, just so everybody's clear, there's 2 documents came out this morning that are like 40 and 80 some pages that we haven't had a chance to look at. We think that hasn't changed much of what we're doing here. But those are called interim rules coming out of the Treasury Department. We'll have those on our website, those links. And there's more of those will be coming out to clarify exactly all these specific ones. So as more comes out, we'll give you those details. Again, as I want to say, we're very high level here today. So we're not going to have a lot of detailed answers for you on the execution piece yet.
Okay. Are 1099 miscellaneous forms still needed for the SBA loans that receive the CARES payment?
Mm-hmm. Yes.
You said that the EIDL grant is now available for 2021. Is that going to be located on the SBA website because they're not seeming to find it? So is that open now?
No.
Now, most of this stuff's not open yet.
As I said, it's not open yet. It's detailed on the slides. Hopefully we'll see that in a couple of weeks, but keep checking because it opens up real quickly. So I just suggest you keep checking.
Okay. If a borrower qualified for full forgiveness of their first draw PPP loan, however, had their forgiveness amount reduced due to the EIDL advance and has since paid off that balance with their lender, will the SBA still remit the EIDL advance to the lenders?
Again, the process has not been identified yet. Our understanding is that you will be made whole on it, I should say. But I can't explain how the process is going to happen yet. The SBA's got to add some clarity to it. And again, it's probably a couple of weeks away.
Okay. So how much more time do we have, Bob, for questions? Because there are.
We got 4 minutes, Jenny.
Okay. How is the reduction in receipts calculated? If your receipts were 100,000 in 2019 and 80,000 in 2020, is that a 20% reduction or a 25% reduction?
That's a 20% reduction. If you had 100,000 and now you're at 80.
And then do you have any idea as to when the banks will be ready to take applications? Because it's showing the deadline as March 31st.
No.
I would ask your bank. Every bank's going to be a little bit different here. Every financial institution is going to be different. Be ready for it. I'm sure that they're not ready now. Hopefully next week they'll be ready, but I'm guessing a little bit. I would reach out to your bank and ask that question, or your financial institution ask that question. But I would think it's premature this week. Hopefully next week you'll start to see some movement there, because you're right. It's March 31st. You don't have a lot of time here. But in fairness to the banks and the SBA, or the financial institutions, SBA, there's a lot of processes they need to work through. So they're working feverishly on that. So hopefully next week, but there's no guarantee on that yet. But the time frame is pretty short. So reach out to your bank or reach out to your financial institution and get a good feel when they're going to be ready.
Okay. Someone that's already filed for the EIDL, they haven't received the funds. Per the SBA, it's saying it's still being processed. Do they have to resubmit another application or just wait?
I don't know the answer on that one. My gut would say they'd have to wait until there's some finalization there, right? Some decision. I'm surprised the SBA is usually responding within 2 to 4 weeks on that stuff. I don't know how long that has been, that outstanding issue has been. There is a website, which I don't know offhand, I thought, and I'll reach out to the SBA on that, where you can actually look at the status of your grant. But if it's been more than 4 weeks and you haven't received anything, that something seems wrong there.
Okay. Now, with the very first PPP loans, they needed the 2019 taxes completed. Will that also be the case for the second part? Will they need the 2020 tax filings to be completed?
I think it'll probably be a blend of both, because most companies will not have filed the 2020 tax return by March. So there's no way for many of the companies to even do that physically. So I believe it'll still be based on 2019, 2020 compared to 2019 information, even if you haven't filed the tax return. And there are some rules that from what I've read, certain of these programs, even if you are not in business until February 15th, 2020, you still qualify for some of these PPPs and things like that, and maybe even a little later. So definitely check that out. That language was specifically for small companies, self-employed companies, where I saw that.
Okay.
Okay. Let's wrap up. We're at the top of the hour. So from our standpoint, we appreciate you all attending today. I appreciate you dedicating the time to do so. I do want to let you know we're here, continue to be here for us. So for you, I should say, reach out. We know obviously what has happened in the last, it's getting 10 months now, 11 months, and it's going to continue on for a little bit. Has just been tough, very tough on small businesses. We appreciate your efforts. We're here to support small businesses. That's our lifeblood. And we really appreciate your efforts in fighting through this and trying to take advantage of everything you can as a small business, because you're being penalized for something that's outside of your control. So we're here to support you. We're here to hear you. We're here to help you out in whatever we can. So love to see you reach out to us, or again, reach out to your other team of mentors, being your accountants, your lawyers. But again, thanks for your time. Everybody have a safe week, and whatever we can do to help out, let us know.
Wonderful. Thank you, Bob. Thank you, Mark. And thank you everyone for joining us today. This is recorded. Everyone will get a recording along with the presentation that was shown during the webinar.
All right. Thank you, everyone.
Thank you, everyone.